Hello, my name is Ify. I'm here to discuss key points on the various IFRS standards. This is particularly important to aspiring accountants and those who are new to the profession, and of course, those who have been practicing in a particular area of accounting for a long time and now wish to learn a bit about what happens in other aspects of accounting, because IFRS is all encompassing. Um, as we know, IFRS stands for the International Financial Reporting Standards. These are sets of accounting standards that govern how particular types of transactions and events should be reported in financial statements. These were developed and maintained by the International Accounting Standard Board, IASB. The biggest advantage of IFRS is that it enhances comparability across companies' financial statements within and across international boundaries. IFRS enhances the quality of financial information, enabling interested parties to make informed economic decisions. Accountants require in-depth knowledge of IFRS, and it is the responsibility of accountants to ensure that their respective organizations' financial statements comply with IFRS. I'm starting with IFRS 1, named First Time Adoption. This standard is for companies converting from their local GAAP to IFRS. That is the local generally accepted accounting principles. A first-time adopter is an entity that for the very first time makes an explicit unreserved statement that its annual financial statements made available to shareholders or external parties comply with IFRS or comply with both IFRS and a GAAP. What is the IFRS transition date? This is the first day of the comparable financial year, and that is the year preceding the year that IFRS is adopted for the first time. For example, if IFRS is to be adopted for the first time in the financial statements of 31st December 2020, the date of transition will be 1st January 2019, because we're going to be comparing the changes that will occur from the adoption of IFRS and the use of the previous GAAP during that period. On adoption of IFRS, recognize assets and liabilities required by IFRS in the financial statements. Derecognize assets and liabilities not recognized by IFRS in the financial statement. As we go ahead to discuss the other standards under IFRS, we'll get to find out how IFRS wants certain assets and liabilities to be recognized. Then this point will be clearer on what to recognize and derecognize. Gains and losses arising from IFRS adoption should be recognized directly in the retained earnings. Recognize and explain how the IFRS affects the financial performance, financial position, and the cash flow of your business entity. This information is important to interested parties. Reconcile the entity's equity to the equity reported under the IFRS at the date of transition, and the last financial statement prepared under the previous GAAP. So you need to highlight having reclassified certain things under your newly adopted IFRS. How does it affect your equity position? The last annual profit and loss reported under the previous GAAP must be reconciled to the same year's total comprehensive income statement under the IFRS. It's important for an organization to ensure that it has staff with proper knowledge of IFRS, either through recruitment or training, before the use of IFRS is commenced. There might be a need to adjust the existing accounting software to reflect the requirements of IFRS. An organization should identify which IFRS will affect its entity, review and rewrite its accounting manual to fit the adopted IFRS. It is also mandatory to disclose errors in the previous GAAP identified during the transition year. Disclosure should be made also of any impairment losses recognized or reversed in preparing the financial statements using the IFRS. Impairment losses are losses that occur when the recoverable amount of an asset is less than the carrying amount. Thank you. These are the key points I picked from the IFRS 1. If you have questions and comments, please put them in the comment section. Click on follow if you want to be part of the IFRS 2 coming soon. Thank you very much.